How you guys doing? Welcome back. Today's lesson 7, realistic goals for this course, and again, account size. I want to cover this again before we get into the main crux of the course and the whole entire content for multiple reasons. One, I want to make sure that your goals for your account size make sense, because if you have 500 bucks, I apologize, you're not going to be able to retire from your job now and just trade with 500 bucks and live off of that. It's probably not going to happen. And then also, if you have $1 million, well, I'm pretty confident safety is probably going to be your number one concern. Let's focus on that. So what steps would I take at each account size? What would I be trying to get out of it at every single account size? And kind of talk about how small, medium, and large accounts should behave. Maybe you should paper trade. Maybe your goals should be focusing on fundamentals more than actually making money. Under the PDT rule, over the PDT rule, all these kinds of things we'll discuss today briefly before we get into the course. And then again, briefly, let's just discuss the goals of this course and in order what you're going to learn. And I can put those in the description box down below. And you can go to the videos you want to go to. But again, watching the whole course in itself makes way more sense to me than jumping around. With that being said, lesson 7, let's just discuss account size and some goals. So when you go through this course, you kind of have some idea of where you are and what your next step should probably be to be successful. So off the bat, even if you have a pretty large account, I would suggest from this point on, I would paper trade for just a little bit to see how it's going to go for you. The reason I bring this up is that there's no real reason to lose money while you're learning. Yeah, there's going to be a different emotional, mental edge to this, because if you're just paper trading, you know it's not real, it's okay. And you're probably going to be more bold, brash, and all those kinds of things with your money if it's fake compared to being in real life. But the fundamentals remain the same, and it's a good practice for you. It's almost like when Allen Iverson was like, we talking about practice? We talking about playoffs, baby? Whatever it is. If you practice the way you play and you want to actually take paper trading seriously, I would definitely start there with all the newfound knowledge you're going to have from this course. That's just me. Secondly, with paper trading, if you're going to form a new edge, which we're going to discuss next lesson on your trading system briefly and how you should, approach making your trading system or your own edge, you got to beta test it at least 100 times, usually in my opinion. I think 100 times or 3 months. You got to, every time you add a new element, a new variable, you change something, I give it about 100 paper trades and make sure it's actually working for you. The reason is, if we're in a bull market and everything's green, yeah, I'm assuming you're going to be just fine. It doesn't matter what the strategy is. You can throw a dart at the wall and probably hit something that's going to make you more profit than losing, obviously, in a bull market. So 3 months or 100 trades really gives you a good idea of, hey, I was 80% with this, 75%, 40%, and you can really narrow down if it is or is not working. Because at this point, your trading system can change, but when you do change it, I would give it 100 trades, 3 months, paper trading, or even just smaller position sizes to see if it's actually working for you. Because if you're going to just go in and have 10 green trades, but it was a huge green day, well, yeah, but you don't know if it's actually working because of the new edge or because of the market itself at the macro level. And just to reiterate, every time I add a new variable, whether you go from volume profile to OBV or SMA to EMA, or using volume in a different way or different whatever, I would again go back to paper trading it. Even if you have your account normally working with your old variables, have a paper trading account with the same exact stocks or what you see and see if it outperforms your old system. With that being said, let's discuss account sizes. I think most folks are going to be a small account size. Good. That's probably where you want to start off at. I'd hate to see someone come to me and be like, I had 100K, now I have 20. Like, oof, not good. So I really want to talk about small account sizes first. Then we'll go to medium under PDT rule, medium over PDT rule, and then large account sizes and what the goal should be at the macro level so you can plan your micro level goals as we go through this course. So small account sizes, what do I do first? I think with the small account size, the goal is fundamentals. I will be focusing on this trading structure, which we've described multiple times here. I'm focusing on that. I'm doing 100, 200, 500 trades with my trading system that's inside that structure, and making sure my rigid rules lead to flexible expectations, and I'm being deadly accurate and being very, very rigid in my rules. That's really key. I think the money you may lose doing this, and you're gonna lose trades, it happens. But under like 5,000 bucks, you're not really talking about life-changing money. If you lose 100 bucks, yeah, that's what, 2 tanks of gas? It's a dinner out with the family. You'll survive, it's okay. But if you make that mistake at a $100,000 account, big difference. So I think that making the mistakes now, focusing fundamentals now, is definitely going to be your goal. So work on those mistakes, work and iron out those issues. Secondly, position size. We're not going to talk in depth in this class about position size because it's not really a focus. Now when I do the extra credit classes that are coming out, we'll discuss that for sure. But my main goal with position size is this. It's like fishing. You can cast a deep net or you can cast a wide net. Myself, wide net. If I have an account of $10,000, I would much rather have 10 $1,000 positions compared to two $5,000 positions. I think there is some justification for diversification, and there's other times for less diversification depending on market systems and how the macro markets look overall. More times than not with long term, I'm less diversified. With short term swing trading, I'm more diversified. If you're going to be well diversified and have 10 or 11 positions, yeah, you're going to be probably more insulated from big drops / the risk is already taken out for you, because if some do good, some do bad. Worst case, you break even. It's okay. So I think you gotta work on position size. What are you comfortable with? What's your risk management going to be like? For me, I always put $1,000 in if I really like it, or $500 if I just like it. That's it. I don't go any more than that, any less than that. $500 to $1,000 is always what I go for. It's very consistent. It lets me be true to my rules. And again, my emotions are always in check, because I know the worst case scenario, if it bankrupts, it's $1,000. I'll be okay. But again, the real issue then with that is when it goes really green. I could have put 10,000 and made way more, but you can't think in 2020 hindsight. Not how this works. Stick to your rules. Again, just to reiterate, this is definitely your time to work on your edge, your system, and your structure with very little consequence. It may seem like a lot now. Losing $100 now may really suck, but you'll thank yourself in 4 to 5 years when you made those mistakes. Now in 2021 and then 2025 or 2030, you're doing just fine. It's not that big of a deal. Also at this point, I would check out options. Keyword check out. Check them out. I don't say go crazy with them, but check them out. I think this is a really good place to start learning options. I don't think you should go balls deep into calls, puts, iron condors, credit spreads, selling call options, whatever it is. But at a large account size, when you can become the casino and lend out options, yeah, that's the move. But for now, learn how they operate, learn how contracts work, and then again, when you have a more large account take on more risk, do it then. Don't be out here blowing up your account and having to wait weeks to get back into it, make money at your job. Options come later. If anyone tries to get you to do options first, I wouldn't trust them myself. It is what it is. After we get out of the small account size from probably about $1,000 to probably 10 to 20, anywhere in there, while you're still under the PDT rule, the first thing I would want to do is figure out your base position size. Like I said with position sizing, I do 500 for a liked one, 1,000 for a loved one. Maybe you want to have less diversification, so 2,000 makes sense, right? Having 5 positions at 2,000, pretty good. It's large, but I don't think it's the end of the world. I think it's better than YOLOing it all into one. But figure out what your base position sizes are going to be and really work on that risk management even more. Really refine risk management, risk versus reward, how much you're willing to lose, and start really doing that math with leverage and opportunity cost while you're still under the PDT rule. With a medium size account, I'm also figuring out multiple time frame trading. Again, after this course will be coming out. New lesson, don't worry. I think that's important to understand what time frame you operate best off of, and that should be your home base. For me, 180 day 4 hour. I stay there almost all day. I will zoom into one other time frame that lends me a good lens of support. It looks good and clean, run-ups, all those kinds of things. I'll use one other one per chart, but 9 out of 10 times it's just 180 day and then one other chart. That's it. What charts do you like? What time frames don't you like? What works best with your system? Figure that out now before you get over the PDT rule. That's gonna be a nightmare if it's not figured out by then. At this point too, how many positions can you operate with good intention and good detail? If you can only work with 4 positions, you're gonna have a hard time over the PDT rule, because what are you gonna do? Just have 4 stocks you can operate with, have $10,000 in each? That sounds risky, right? Try and work on smaller position sizes and take it on 5, 8, 10 positions that you really like. And again, it's really important to note that there may be not that many opportunities to practice this in certain market conditions, because again, we let the market come to us. But on a really, really good sell-off, you're down 4 or 5% on the S&P, everything's on sale, this may be the time for you to be like, all right, I'll take out 8 positions and see how I do. Again, smaller position sizes for your account. You lose some, you win some, it's fine. But the goal should be, how can I operate? How can I make my morning ritual, my day activities, my after hours? How can I organize this and actually operate and own and run 8, 10, and eventually like 20 tickers, right? Work on that for sure at this point. I would also start thinking about my entry and my exit strategies. We're going to talk about this in depth in the class, but I think a lot of beginners have no idea how to enter and then how to leave a stock. It's sad, but it's a very easy fix, which is good. Do you enter because of value? Do you enter because of an SMA or an EMA crossover? Do you scale in? When you sell, do you sell off of value? Do you sell when it breaks below an SMA or EMA line, or do you scale out? Do you buy in the morning? Do you buy in the afternoon? Do you buy after hours? Do you do all your stuff on weekends? What's your entry strategy? What's your exit strategies going to be? You can use all 6, all 7 of those. That's totally fine. But have them in your tool belt. Work on refinement of entering and exiting the market. Maybe you're like, hey, I don't care when I enter and exit. I'm going to be a long-term guy. Sure. If you're scalping, you might want to figure that out as soon as possible, right? At this point as well, under the 25,000 PDT rule, what do you do with your day trades? It's a great question. You may see a great opportunity to make 10, 20, 30% in one day. Do you take advantage of that? What if you have 3 great day trades on Monday? Take all 3 of those day trades, now what? Do you have a horrible Thursday and have to hold overnight a bunch of stocks that are dipping? What do you do with your day trades? For me, I use them for risk management because, again, what's that foundation, baby? Risk management. I think the best thing you can do, in my opinion, until you get better at day trading, and if you're good at it, ignore me. But if you're getting good at swing trading, whatever, I would use those for risk management. Let's say I enter a position for a swing trade and it just crivels down 4 or 5%. Boom, use it. All right, get out. It's okay. You'll have more opportunities next week. You have 2 left. Let's say it's Friday and the markets look, you have no more day trades left. I would take that in consideration for my risk management. I can't get out. I have to hold through the weekend. It could be risky. A good thing around this, multiple brokerages. You can do this. If you have a Webull, a Robinhood, a Fidelity, a bunch of different brokerages, they'll each give you 3 day trades. So you have 5 brokerages, you have 15 day trades. That in itself is going to insulate you and help you with diversification and also with this organization tip we've been talking about. I personally have 2 accounts, Webull's swing trading, Fidelity's long-term investing. I keep it that way, I keep it separate so it's not all together and confusing. But again, the more brokerages you have, the more day trades you get, the more risk management that's built in. But it'll become more confusing. And again, if they change that rule, you may be kind of screwed. So don't rely on that. But that's a great tip for you if you want to diversify and have more day trades, multiple brokerages, just a fine idea. At a certain point, you will hopefully get over the PDT rule. If not, oof. Once you're over it, here's the biggest problem I have with folks who get over the PDT rule is this. How do you properly adapt to the opportunity of more trades without over trading? Ooh, that's big. One more time. How do you operate when you're given the opportunity of more trades without over trading? Here's the issue. A lot of folks are going to swing, then they get to 25,000 PDT rule and then start day trading. You just change your whole strategy. Why would you were successful before the PDT rule. Now you're going to switch it up? Why would you do that, right? Maybe you can go on a lower time frame, change some scanning stuff, and actually operate just fine. But do not break these rules now that you've gotten over the PDT rule. Don't. I mean, if you got here by being successful with swing trading, yeah, just keep swing trading. Maybe take some more day trades. But to change the whole structure, the whole plan, because you have a new opportunity, makes very little sense to me. If you're going to change everything, which is a fine idea, remember your small account. You must paper trade, and you must vet every variable that's different now. New time frame, 100 trades. Take this off, add that, 100 trades, 3 months. Bull market, bear market, short term, whatever it is. If you're going to change everything over the PDT rule, you must be prepared to do extra work and extra testing. If you don't, I think you're going to have a horrible time going from swing trading to day trading, taking way more positions for this opportunity. You're probably going to end up under the PDT rule very soon, honestly. Protect yourself. Don't fix what ain't broke, baby. Keep it going. Don't be changing everything. Secondly, if I am at the over PDT rule, this is the opportunity for me to start looking into long-term investments and then long-term holdings and, of course, my retirement future. If you're 55 years old watching this, hello, the issue may be for you. You may not have time on your side. The number one asset of folks my age and younger, I'm almost 30, is time. If you do have the ability to get over $25,000 saved in your brokerage account, this is the time for you to start thinking about what percent do I put towards my long-term investments for my income, from trading, and all those kinds of things. Open that second account and get that passive dividend growth income rolling. That's what I would do. At this point, You're at a large account size, 50, 60, $70,000, maybe 40 or 50 for some of you. To me, that's a large account size too. Again, I don't think it's sustainable to day trade until you're like 80. Now, for some, it very much is. I have friends who are Harvard graduates who do this forever, and they're doing just fine. To you, top of the morning, tip the hat to you. Great stuff. But for an average retail trader like us, I think the goal long term is probably for us to become passive income generators and to have no need to work. Work if you want to, but to not have to, it's kind of a good time. It really is. So, of every swing of every day trade, establish what percent you're going to take off a profit to put towards that long-term account. If you're going to make $1,000 on a trade and you profit $1,000, great stuff. Do you take off the top? Pay yourself first. Do you take off $250? Boom, in my long term. 50%, boom, in my long term. And then the rest of the profit can stay in that swing account to, make more trades and cast an even wider net. But eventually you have to establish of every profit I make, what percent goes towards that long-term account for my long-term goals. You may make $10,000 on a trade, beautiful. Take $5,000, go buy some Vanguard, go buy some dividend stocks, go buy some Apple, go buy something you're not going to touch for 30 years. Establish that now. Establish that rule of paying yourself in the future first, because every single dollar usually doubles within 8 to 10 years. $1,000 now is like $8,000 in 50 years. I'm not good at math, but again, pay yourself for the future. What would you rather have? A pair of Nikes now or a brand new car down the road? That's real. Think about it. There's shoes sell for $300. You can probably get a really nice car at 60 for that same exact money. Pay yourself first from your profit. Once you get a long-term account, once you get that big account, there's no point in throwing more money in swing trading. It's just more risk you don't need. At this point as well, it's all about security and safety. The goal is to work towards long-term goals. You can either A, fund your lifestyle. You want to have a good time now? Beautiful. Or B, long-term assets and long-term goals. Real estate, stocks, whatever it is, I don't care. Go get something with that money through safety and security. There's no point anymore to try and home run hit 50%ers out of the park and scalp these trades. Man, a 5% move on a $10,000 investment is a lot of money compared to what it used to be with only $1,000, right? It's all about safety and security. Try new variables for safety and security. Really whittle down your scanning process. Only play certain stocks. Take your time. It's all about safety and security. At this point of a large account, blowing it up is not an option. You've worked so hard towards this, and this is what I mean. I don't view money as money. I view most currency money as time. I figure since I was a kid, I don't know who told me this, but it's like I view money as like hours worked, and I still think about that. To buy $100 concert tickets and a minimum wage job is like 15 hours worked. I worked 15 hours to see that band, right? If you're gonna take a $100,000 account and ruin it, you just wasted all of that time. So blowing up your account at a over PDT Rule size is unacceptable. It's always about safety and security once you get to its large size. These YOLO plays make no more sense. Stay off Wall Street bets. Focus for real. And at this point, this is where the options that you've been learning can really start to pay off. Credit spreads, iron condors, selling covered calls. This could establish the easiest income you're ever going to see. Yeah, you'll have growth, but if you were to have this AMC craze, and I've been saying this forever, if I was popular in the AMC space, I'm not throwing shade, I'd be like, oh, I think we're going to see $80 this week. And then I sell 100 cover calls at $75, and folks are like, we're going to get there. And I get a $200 premium from all of them. That's what I would do, right? I would become the casino. At this point, your options should go from being buying the calls and buying the puts to selling other people the calls and the puts, right? So establish what options you want to take on, what contracts you want to lend out. It can get riskier, but again, an iron condor or credit spread done correctly is so much safer than just buying equity in some markets, for sure. And that's what I would be focusing on. That's my goal setting ideas for you. As you go through this course, you have $10,000. Take some time. How much is every stock going to get in my portfolio? What risk management can there be? Do I know anything about options at this point? Can I swing trade and keep day trades for risk management? All these types of things. Think about what I pose to you and internalize it and do it yourself. Take what you want. That's what I would be doing. And again, when it comes to the goals of this course, let's just talk about these really briefly again, because next is what is your edge and training system, and then we have about 40 lessons of straight content. So let's talk about technical analysis. When it comes to technical analysis, what I want you to get out of this course, just to make sure it's crystal clear: supports, resistances, trend lines, channels, volume profile, the patterns I want you to know, specializing, not playing everything, using historical data correctly, convergence, playing these reversals that we see, bring it all together, and then your realistic goals. Through technical analysis, focus on those things. You become much, much better in TA if you focus those things with the right mindset. Then we'll discuss a trading plan. We'll discuss indicators, establishing loading zones, price targets, and stop losses, writing the actual trading plan, convergence and buying in correctly with the buying in strategies. What happens when you buy a loser? What happens when you buy a winner? Selling out once you have a successful position. What happens with a runner that just keeps going? And again, our realistic goals at the end, bring it together. We'll discuss all those things in a trading plan. After that, fundamental analysis. What are the basics of fundamental analysis? How to use analysts correctly. What are catalysts? All 8 that I talk about in this course. Stock, ETF, mutual fund, all the digits, PE ratio, EPS, gross margin that I like to talk about. And then gravitational forces, and then wrapping a big bow on that. Focus those 6 things through fundamental analysis. Next, we'll talk about mental analysis. The basics of mental analysis will be the first conversation. The investor mindset and how to maintain wealth correctly, and then how to properly accept responsibility. And then from there, wrapping a pretty bow on that as well. After that, macro markets. That's one of our walls as well. The 4 indexes that I use and 11 sectors that I use, and how to properly watch sector and group and industry rotations. After that, we're going to discuss goal setting. What are SMART goals? How to have SMART goals, and then again, aligning, as we've been talking about in depth, how to align your macro goals to your micro goals. We'll discuss that, wrap a pretty bow on that one. And then again, when it comes to consistency, how do you hold the stock properly? What's your morning ritual? What do you do on red days? Halfway to your price target, what do you do? Do you swing under the PDT rule or over the PDT rule to maintain consistency? And then how do you stop torturing yourself watching your stocks all day? How do you do that? We'll discuss that as well. And at the end, conclusion, importance of building a relationship with your stocks that you enjoy. I'd much rather play 20 stocks my whole life, the ones I know at the back of my hand, than playing a bunch of random ones I find on Discord. Honestly, building that relationship is huge. Finalizing your rigid rules, revisiting our structure and the trading system that we may have developed, and of course, our final words. That is this course. That's what we're getting into this course in our next lesson. So, that's the goals I'll be maintaining. Those are the goals I'll be focusing on through this course. Next, what is your edge in your trading system? I have some insight on what I'll be focusing on. I just have some points I want to point out to you before we start this. Again, your trading system can change. Your edge can change based on market conditions. If it's a bear market, switch that. Go from bull to bear, that's fine. You want to now day trade a little bit more. Go from 180 to 20-day time chart. Fine, great. But again, I want to just discuss some really important points to a trading system, and then how you can change them and how to be more successful. Because then I can tell you what your trading system should be. This is not the typical, hey, you should do option calls because this guy in YouTube said so. This is going to be the trading structure course. Whatever you want to put inside this bad boy, whatever you want to put in here, keep it safe. That's on you. I got some points I want to talk about and where I would go with it if I were you. With that being said, lesson 8, before we get into big content, what is your edge? What is your trading system? Let's get into it.